Hi Paul, thank you for your time today. So we'd like to hear from you some of the, to share a little bit in terms of this new fund launch, which is the United Singapore Dynamic Income Fund itself. So starting off, on a year-to-date basis, I think the developed markets have done very well, especially the US itself. So why should investors consider to look at Singapore instead of developed markets?
Yeah, I think that's a very good question, Roger. One that I think is foremost in a lot of investors' mind. So first off, we want to recognize that Singapore itself is a more stable market, right? So over time, Singapore assets tend to give stable returns. So that's number one. And then number two, yes, although the developed markets, especially US, has done very well, but it actually comes at the price, right? It's more volatile. It's higher risk, so it might not be the market for all investors. Or even, you might believe in the developed markets, but yes, it's gone up quite a bit. You're not so sure whether you want to dip your toe into the market right now. So this product that we're going to launch, I think, could be suitable for people with this sort of profile, right? So they're either looking forward to more stable type returns, or they're not so sure at the moment. Maybe this is a good way for them to dip their toes into the market.
There are already so many Singapore funds in the Singapore market. So why is UOB AM launching yet another Singapore fund?
Roger, I think this product is truly very unique in the market. I've been investing for more than 20 over years, and this is the first time I've actually seen something like this been launched in the market, and that's why we're so excited. So on the one hand, I think this is the first ever multi-asset type product based on the Singapore asset classes that is actually allocated dynamically using AI, artificial intelligence. So we've developed this artificial intelligence AI model to help us to do allocations optimally. And on the other hand, we also have our very experienced top-rated managers managing each of the individual asset classes. So this truly is unique in the sense that it brings out the best of both AI and of our human managers, and we believe that it's going to create a lot of value for our investors.
So I think you mentioned a bit more in terms of the multi-asset aspect of the fund itself. So when you talk about multi-asset, when you are traditionally, when you are a positive investor and you are a bit more aggressive, you go equity. And if you are not so positive on the economy itself and you are more conservative, you go bonds. So why would a multi-asset fund be appealing to all the different client profiles?
Like you said, if you are invested in the equities all the time, yes, over time your return has historically been higher than just investing purely in bonds. But also you're paying a price for it, right? Because it's more volatile, it's more risky. Same thing on the flip side. If you just invest purely in the fixed income, you're going to get lower returns. But of course, it's safer, but you don't make that much money. Now, what if you could have the best of both worlds, right? What if, when the markets are going up, you're invested fully in equities, and then when the market's coming down, you take a more defensive position either in bonds or in money market fund, right? So the man in the street, for a man in the street to do that, I think it's pretty difficult, right? They don't have all the time, they don't have all the data, or even the expertise to do that, and that's where we come in and we offer that expertise.
So I think early on, you also mentioned a little bit in terms of artificial intelligence, and you mentioned about how the AI can help in terms of the analyzing of the stocks and so on and so forth. So why not, can you just elaborate a little bit more, what exactly is this AI and how it can actually help the fund's performance?
So AI is a very hot topic this year. So it is a term that's been thrown around, and it means different things to different people. But one thing is very clear, that the AI has really impacted our everyday lives in a positive way, right? I mean, from users of Netflix, for instance, to ChatGPT. And what does AI do for us, right? And I alluded to this slightly earlier. So it crunches through a lot of data that's humanly impossible to go through, so that we can arrive at a very objective, data-driven, less emotional approach to investing. So we make the right call most of the time. And how do we do that? We literally go through every single stock and bond, and then try to sniff out the emerging trends, right? We try to catch the trend much earlier than our competitors, and that's how we create value of AI.
I think now the big question would be, given this is a new fund, and what are the reassurances that investors will have that this fund will actually deliver positive returns as well?
I think that's a fair question, Roger. As with any other new fund that's been launched, that there isn't a real track record. But I want you to consider that actually the model that's been used to run this fund for asset allocation. Now that has been used, like I said, in some of our other funds, and to achieve award-winning results. So that very model it's been tried and tested for over 3 years, and then now we're deploying it, the same model, the same engine for this Singapore Dynamic Income Fund, right? So there is a track record down there on the performance of this model, and of course, on the other hand, our managers who are managing the individual asset classes. Now those managers are also been around for a long time. They have a very long track record that everyone can go check out, and they perform very well as well. So you rest assured, I think we have a proven engine, AI engine, to help us to do allocation. And also on the other hand, we have very experienced manager with very good track record to help us to run the security selection. So in that sense, I think we're very hopeful that we can create quite a lot of value for our investors.
Thank you so much, Paul, for your time.
Thanks,
Thank you.
Roger.